Good evening. May I have your attention? I want to welcome you all to our cryptocurrency panel hosted by our Masters of Science in Finance program. I'm Isabel Lopez Miranda. I am the Associate Director of the program, and I want to welcome you all. It's a great honor to introduce the Chairman for the Department of Finance, Dr. Shahid Hamid.
Thank you, everyone, and good evening, and welcome to this event. On behalf of the faculty, staff and the program, I welcome you all. So, Miami-Dade County and Miami is on a mission, basically, to become the fintech and crypto capital of the world. And we at FIU have been given a mandate, and we are on a mission to basically provide research and education and become one of the leading institutions with respect to crypto and fintech and so on. So, as part of that mission, we have introduced a new track in our Master of Science Finance program. It's called the Innovation Track, and we have basically several courses like application of AI and machine learning, big data in application in finance, and innovations, financial innovation, part of which is basically, uh, well, it includes topics like crypto and blockchain and so on. So, as in that particular course, Professor Florent Roxelin was able to get two distinguished speakers over here for his class, and we decided to basically bring them in over here for the wider audience, and they graciously accepted. They've come all the way from Switzerland, and I'm sure you'll find them, uh, very, very knowledgeable, and I hope to learn a lot. I mean, this is a new subject for me. It's confusing, and I hope they will shed some light on this. Thank you.
Thank you, Dr. Hamid. And now to begin our program, I would like to introduce Dr. Florent Roxelin. He is an assistant professor in the Department of Finance and also an MSF faculty member who teaches the Financial Innovation course. That's one of our newest popular course in the program. And this course, you can see, like Dr. Hamid said, underlying cryptocurrency, blockchain, and this is one of the major topics that he teaches in his course. And now I would like to introduce Dr. Rosalind.
Good evening, everyone. It's so great to see so many known and unknown faces in the audience. So welcome you all. Before anything, I wanted to thank Isabel and Brandon and the rest of the MSF team for allowing this event. They've been putting so much work to invite the guests and preparing everything. So yeah, they've been great help. Thank you very much. Now, I wanted to introduce you to Frédéric Julliard and Dr. Berat Desdadarian, which I always get that wrong still. So these two amazing entrepreneurs have been invited in my financial innovation class in which I teach blockchain and crypto. And they've done such a great job that the students gave me unsolicited feedback. And at this point, I thought that we would benefit from their presence for, again, a broader audience. And yeah, they're here. So this is great. You'll see each of them are going to present two different topics. At the end of the day, they are working together in a new startup that they're going to talk about also, which is Deepsquare. The way it's going to work is Fred is going to start with a 45-minute talk. I'm going to interact with him with some questions, try to address questions that I think you may have if he's not addressing them. Then Berat is going to follow up with another 45-minute talk, and then we'll take some questions from the audience about 30 minutes. So maybe we can get started now. I think Fred is going to introduce himself better than I would. He is a very successful entrepreneur. He already has several startup experience on his belt. He's managing more than 10 people in his first startup, and he's always on the phone, always so busy and looking important and handsome. and now I think I'm just gonna ask him to tell a bit more about himself and about the project. Maybe we can.
Can you please?
You'll need to turn that off.
The small clicker.
Oh, you want the clicker?
Thank you. Thank you, Florent. Hi, everyone. It's a great pleasure to be here. We want to thank Isabel and everyone from the MSF faculty for organizing this event and giving us the opportunity to present you a little bit what we've been doing and developing in Switzerland. So thanks again for being here. So yeah, I'm Frederick. Born and raised in Switzerland, where I spent most of my life. I'm a life science engineer, so I studied life sciences in the Swiss Institute of Technology, which is based in the French area of Switzerland. Had a chance to finish my studies in UC Berkeley, where I met Florent, and yeah, spending a year in the Silicon Valley gave me a little bit of this taste of entrepreneurship, and this is really something that I found super exciting. And so I went back to Switzerland after this very interesting US adventure, and quite quickly started my own company. This is really something that I wanted to do. So I founded Tritech, which is a company where what we have developed is a technology that converts all type of liquid waste into valuable byproducts. So we recover water, we convert the organic waste into energy, and we really participate to the circular economy. So you mentioned it's a company. We are 10. I'm the CEO of Tritech. We are about to leave a little bit the academic world to go to customers, preparing our Series A, etc. So it's a very exciting moment for us. But I'm here today really to talk about Alpine Tech, which is a company that we founded in 2017. Back at this moment, I had a little bit of time, and there was these entrepreneurs around me that were looking for support, and I had a little bit of experience. So it was 2016. We were all like super exciting about blockchain, about cryptocurrencies, starting to buy a little bit like Ethereum and some new cryptocurrencies. And at this moment, what we thought was really exciting was not only just like, we are engineers, so we just didn't want to buy cryptocurrencies and trade. We really wanted to participate and put our hands really into this developments. So I'm really going to talk about Alpine Tech, and Alpine Tech is really like a crypto. Our core business was really to do crypto mining. I'm going to explain you what is crypto mining, and then how we went from this very specific industry to what is the Deepsquare project, which is like sustainable high-performance computing. So very quickly, the mining, crypto mining. So mining is really, it consists of providing, allocating compute power for like very specific needs, and it's really like what is securing the all type of different blockchains. So Bitcoin, Ethereum, etc. So basically, you build like huge computers, and everything that these computers will do is like secure this blockchain. And as a miner, you got some rewards with the blockchain that you are actually providing this security for. So you mine Ethereum, you will get some rewards in Ethereum, which is super great if you want to gamble a little bit, but it can be also super risky because you also need to, you have like some costs. So you need to be sure not to sell your cryptocurrencies at a very important moment. So you can do this crypto mining with two different hardware. The one on the right here is what we call ASICs. It's the kind of material that you will use to, and everyone I think knows the Bitcoin. So you mine Bitcoin with the ASICs. But this is the kind of hardware that you cannot reprogrammed. So this is really like a very, very powerful hardware that will do a single type of execution. So it's really like a huge focus exclusively on this blockchain. And on the other sides, there is like this other set of what you can do with mining with GPUs. GPUs are our graphic cards. This is what we have in all our computers. What is interesting with mining with GPU mining is that it's flexible. So that means you can switch from mining Ethereum to mining other kind of blockchains, Monero, Zcash, etc. And you can also you can trick the GPUs. You can really, and again, this was really like our philosophy. We were like tech people. We wanted to not just like purchase hardware, switch in, and just like not do nothing. So we really wanted to optimize this hardware. And with GPU mining, you have this possibility. So I will quickly talk to you about the different aspects of mining. But basically, when you want to optimize this kind of hardware, what you want to do is like decrease their electricity consumption and make it like extremely efficient in its mission. So that's really what we've done for like since 2016, 2017. We started this adventure in a bike storage with like 16 computers. So you have like 6 GPUs per computers approximately. So that was a very small infrastructure. No, okay. And we started this in a very small village in Switzerland called Gondo. It is here. So at the border of Italy. So Switzerland is like surrounded by France, Germany, Italy, etc. And we were up there. And the main reason why we were up in the mountains was because mining creates, I mean, you consume electricity and you produce a lot of heat. And of course, when the nearby environment is cold, then you can cool down your hardware in a more efficient way. But also, one of the main important aspect of mining is the electricity costs. And in this small village, we had access to a hydropower station with quite low electric price, which was really what we were targeting and looking for. So yeah, just a few pictures about this first mining facility. That was not even in Gondo. That was like just above this bike storage. That's early, I think that's 2016. At this moment, we put a little bit of our money. We sold our cryptos to really purchase hardware. So we had like 400, 500 GPUs. And at this moment, mining was like really an early beginning. It was not really an industry. So we had to craft everything. We had to design everything. What you can see here is actually like aluminum bars that were initially designed for like poultry, to create poultry. So we found like everything that we could design and craft really to make mining possible. Because at this moment, when you receive your GPUs, the only thing that you want to do is like start mining as soon as possible. So you don't have the time to create some fancy stuff, because it was a moment where the mining was so profitable that, yeah, again, the only focus was really to make this hardware run and start generating some revenues out of it.
Fred, can you tell us a bit more how much capital did you engage in that first facility and how many GPUs you have?
Yeah, so back in this moment, I think we put $300,000 to purchase really this first set of GPUs, and this actually led us to this first infrastructure in Gondo, where at this moment we managed to finance. So here we have like 200 mining systems. So 1,200 GPUs. We managed to finance part of this hardware by actually opening a little bit the company and our project to to the community, basically. So this is what we call cloud mining. We basically like allow people to give us like 5,000, 10,000 US dollar, and in exchange, we allocate them part of this mining system to them for like 1 year, 2 years, etc. And the mining system will really mine for them the Ethereum that are being generated or rewarded are going to their wallets. So yeah, we also finance part of this hardware in such a way. As you can see, it's everything like handmade, and we were like really focused on operating and developing as much as we could. Again, just a important point is that all the electricity that your hardware consume is being converted into heat. So here we were like consuming 400 kilowatts. So this is a lot of heat, and you need to extract this heat as soon as possible, as quick as possible, because if your hardware remains in a very hot environment, then it's decreased its performance. So back in these days in Switzerland, the marijuana became legal, so there was like a huge hype in building marijuana infrastructure, and that's actually where we found all these, air extracting, and that's where we have like all these pipes bringing like cool air on the GPUs and like extracting the hot air at the ceiling out of the room. So here we were mining. Our revenue was approximately 3 to 5 Ethereum per day. At this moment, the Ethereum was also not the price it is today, but still, it was really very, very profitable for us. Like
So,
one
so
GPU.
you mean 300 to 500 Ethereum, not 3 to 5, yes?
No, 3 to 5 per day with this whole infrastructure.
Okay.
Yeah. Just to give you an idea, one GPU costs you approximately 300 US dollar, at least at this moment, and you would have like your payback on this kind of hardware in like just a few months, which was again really why we wanted to be like as fast as possible, because you never know how tomorrow will look like, how the markets will go down, how some crazy events will happen and will have like an impact on your business. So this first adventure in the Swiss Alps brought us a little bit of communication, press release, etc. And we were really one of the first Swiss companies that was really dedicating 100% to the crypto mining. We had we got some attention from local people that were actually developing with like a bunch of bankers from London, a company in Hong Kong called DigiNex. DigiNex back in this time was really a blockchain company. So they were investing a lot of money trying to onboard startups, trying to develop a lot of different solutions in the blockchain ecosystem. So they have like an exchange, they had like different things. And they really wanted to also put a feet in the mining industry. And they were looking for a team that could set up an infrastructure for them, also find the right spots, the right access to suppliers, etc. And so we initiate like first discussions, and in 2018 we went to find this new area. I must say that Switzerland was not really a very scalable place. First, you're really in the Alps, like there is mountains everywhere. You cannot like build huge warehouse to install this kind of hardware. And also the electricity price is really something that is super important. We had the chance to have like very decent price in this small village in Gondo. but you know, you always look for something more efficient. And such as what you can find in Texas today, like with very cheap electricity price. At this moment, Sweden was a very interesting country. So that's where we went to build like this 8 megawatt infrastructure. So we really went from 200 mining systems, so approximately 1,200 GPUs, from like something a little bit bigger. So we had like 5,000 mining system, so 40,000 GPUs. Back in the days, it was May 2018. That was one of the biggest purchases at NVIDIA. So that was really something big. The mining community or industry was really taking off, but a lot of people were really focused on Bitcoin mining with ASICs, etc. And again, what we really wanted to do was really focus on GPUs, because they are the kind of things that if you are good, then you can be better than others. And we really had like these technical people in our team that were like crazy about making the GPUs consume less electricity and really optimize their performances. So for us, it was really like this scale-up adventure where we were like 6 people in Switzerland doing everything with our hands to like something where it becomes a little bit like industrial. The industry was also ready at this moment. So I mentioned these aluminum bars for like to build poultries. That was not the case anymore. So you had like what we call this mining system that you can see here. So it's like a computer basically, but really optimized so as you can put a lot of GPUs there. So the industry was really ready, and we had access to this kind of material. So really for us, what was really interesting here was to synchronize a lot of different actors, stakeholders, electrical stakeholders. We were really building some kind of data center. Of course, it's not like a real data center, but so from scratch. So we really had like to gather a lot of people, and we really went from a very small team to a bigger team. The whole setup of this data center took us like approximately 6 months. And then we operated the site for a little bit more than a year as well. And this has really pushed us to the process. So we had to do everything times 40,000 or times 5,000. So you cannot like just take one mining system and try to do your own thing. You need to really have like everything step by step. And for us, it was like super interesting because we had like a lot of things to learn. And again, we were like the only startup there. So for us, it was like, you know, everyone coming from Switzerland, from France, from different countries, being like 24/7 in this like, I'll show you where it is, but it's a Lapland, so above the circle, the polar cycle, and like just all of us in a small village. So you basically don't care working 24/7. So for us, it was really like we wanted to go as fast as possible, and you need to align all these interests because you have like the local contractors and they don't really care about that. So it was also like a lot of things that we learned back in the days. So yeah, crafting all this mining system, GPUs, etc., which eventually looked a little bit like that. So this is like really like the racks with like different servers, 11 or 14 servers that we will put there. And DGNX focus was really into Ethereum mining. So that's really what we did for them. Again, the relationship was, we were like a service provider. So we were like paid every month to do this service for them. We had a little bit of revenue sharing on like some performance of the hardware, etc. And yeah, so just a few numbers. We started operating in September 2018. At this moment, and I just quickly mentioned earlier, like what do you do with your crypto when you get rewarded? Do you store them in your wallet? Do you sell them? Of course, you need to pay people. You need to pay electricity. The most important aspect of mining is really like the electricity price, but also the electricity availability and the hardware availability. That's one of the most important aspects there. And in this infrastructure, we were mining approximately 150 Ethereum per day. At this moment, Ethereum was 800 to 1,000 US dollars, so approximately $120,000 per day of revenue. Electricity was quite cheap, so around 10,000 US dollar per day as electricity to pay to the utilities. So it's a net profit of $110,000 per day, which gives you the full, these 40,000 GPUs and all the material was a total budget of 25 million US dollars. So this gives you a little bit of a payback, a bit less than a year, which is like very, very interesting at this moment. And so yeah, just to give you an idea and also to make you understand about the timing is so important. By the moment you have purchased your hardware, you need to make it run because you want to be sure that you can really pay it back as soon as possible. So hardware came from China. DigiNext didn't want to take like the time to like ship it by boat, so we really like loaded the full Boeing 747 with like GPUs everywhere. One of my colleagues was in the plane, landing in Turkmenistan, and then arriving in Sweden. And yeah, this whole thing started. Of course, as a startup, we also had like a little bit of a social life. So again, it's really like you're with your colleagues, with your friend, like on 24/7. So, and it's not like you're not in Stockholm in Sweden, like which is the capital, like a nice city with like a lot of activity. You're like in the middle of nowhere, which is beautiful, beautiful lakes, forests, etc. But there is not much to do. So we had a little bit of fun. As you can see, sometimes I would bring some Swiss cheese to my colleagues. And yeah, this video will show you a little bit of this Swedish adventure. So there we go. So I'm gonna switch a little bit topic, but maybe just like as a take-home message, like three very important points about mining. If you want to make this business successful, you will need like very cheap electricity price. You will need like access to electricity. And again, back in the days, the electricity industry or the power industry was not ready for miners. I mean, they had like their ongoing market and customers and needs, and suddenly the miners arrived, and we had like shortage with like electrical transformers, like some things that were absolutely not expected. So the availability of the electricity is a very important aspect, and in north of Sweden, this whole area became like a very big hub for like data centers, a lot of miners as well. And this is really something that is extremely important. Just to give you an idea, you can, if you want to make like very big money, you can and even there is like company doing IPOs with an electrical contract, so a contract for like utilities at a very low price and like access to hardware. But you don't have anything. You don't even have like a facility. You don't even have like miners running. You just have like 3 cents per kilowatt hour contracts and like access to hundreds of megawatts, and like a very nice contract with Bitmain, for example, that will provide you the ASICs. And just with that, you can do, and there's like many examples of company that did just IPO with this 3 kind of aspects. So that's really something that makes this industry. On our side, we were like, of course, passionate about mining. This was really something extremely exciting for us, but it was not really part of our DNA. For us, mining was a very good mean to generate some revenues, but we really wanted to use this money to create something a little bit more exciting for us. We also have like this approach in going more in the sustainability side, and as you probably know, like Bitcoin mining is using a lot of electricity, and yeah, it doesn't suit to everyone. So we really went from and again, just maybe another small point. With these GPUs that we had, there was like a big frustrations, because these GPUs with this kind of hardware, you can do like multiple things. But when you purchase that for mining, then the supplier, which is NVIDIA, they kind of block the hardware just to make it like extremely performant for the mining. So even though we tried to trick it and find all the different ways, we couldn't change this hardware to make its compute power available for different types of workloads, so utilization. And that's really where we thought, okay, we want to continue in this industry, but we want to make something that is first more stable in terms of revenue, and that is also more profitable, because compute power can really be used for like a lot of different things. I mean, we live in a world where compute power will be more and more used, like with our autonomous cars, with the 5Gs, with a lot of different things, with data scientists that needs to train some machine learning models, etc. And this is really where, that's really the direction where we've decided to pivot a little bit in 2019. We've created this spin-off from Alpine Tech, really going more into the artificial intelligence, what my colleague Berat will discuss in a bit. And we had like a little bit of money, decided to do like some crazy projects. Some were successful, some were like total failures, but that's also how you learn, and that's always like very good learnings and take-home messages.
One question, Fred. So
please.
Can you tell us a bit more about the cyclicality of the mining business? I think this is also another aspect that maybe triggered that change that you wanted to make into Deepsquare.
Yeah, absolutely. So the mining industry is, it's quite funny. Like when the Ethereum price is super low, that means mining is less profitable. And if you end up paying like a high electricity price, you need to switch off your machines, basically, because you will pay more electricity than the rewards that you get with by mining Ethereum, Bitcoin, or whatever. So there is always a little bit of these two parameters. And regarding the hardware, it's also extremely interesting, because when the mining is not profitable, everyone wants to sell the hardware, and no one wants to buy it, basically. And when it's the opposite, then people are getting crazy to purchase hardware. And just to give you an example, we used to purchase like these graphic cards for like 300 US dollar per piece. We mined with them for like more than a year, so the payback of this GPU was probably done already like multiple times, and we ended up selling these GPUs for like even a higher price that we would like have purchased it. So just to give you a little bit of an idea of how crazy the hardware industry, especially in the mining, can be at some points.
Yeah, thank you.
So this really brings us to the Deepsquare project. So I think I better illustrate this with a picture of our proof of concept, which is located in a Swiss university. As I told you, very important aspect is that every watt of electricity that you put in your hardware to make it run, it will be basically converted 100% into heat. And you need to extract this heat. And of course, when you are like in the north of Sweden, it's very cold outside. You don't really care. It's very complicated to recover the heat from air, because air is not a good, doesn't have like a good coefficient factor of transfer. This is why what we do today is what we call immersion cooling. We can't see it super well here on the picture, but actually all our servers are immersed into oil. And the servers use electricity. They are heating up. They heat up the oil. And then the oil can be connected to a heat exchanger. And then we cool down the oil and we'll heat up some water that will be injected into the district heating. So we can really like heat some buildings, or like district heating really participates to the circular economy of this particular building or city. And this also allows you to, I mentioned the electricity price of the mining. When you do mining and you cannot recover your heat, you need to be sure that you will not pay above 4 or 5 cents per kilowatt hour. When you do immersion cooling, you know that even if you pay your kilowatt hour 20 cents, but you can sell your kilowatt hour of heat at like 16 or 70 cents, then it really balances the thing, and then it becomes like super interesting. So this particular hardware, and there is like really these 3 pillars for the Deepsquare project. So it's really like the sustainability part is really like one of our main pillars. So we want to use hydropower or like at least green electricity. We really want to be able to recover the heat and make it like a useful for the city, a building, or whatever. What we call idle resource management is something that is very important. In a lot of data centers in the world today, you have a lot of computers that are used at some point because they have like a customer that needs to store data or that needs like compute power. But a lot of moments also in the life of this hardware, it's being switched off or not used. And of course, in terms of efficiency, this is not the best. So what we have with these servers that you saw on the picture is that they are used 24/7 all the time. So, and we have like different sets of customers. So the compute power will be allocated to train some machine learning model, for example, for data scientists, will be allocated to AI startups that needs to train models, do a lot of different things. Another application is rendering, for example, people developing some cartoons that will need like a lot of compute power. So we have like these different workloads, and by default, if the hardware is not being used for one of these customers, who, by the way, are really more profitable for us than crypto mining. An hour of machine learning customer is way more profitable than mining. But by default, when our hardware is not being allocated to these customers, it's doing mining, because we want to be sure that it's always being used, and also that we can always recover the heat. We kind of commit to provide the heat to customers. So we need to make sure that it runs 24/7. So yeah, a little bit about the energy demand. I think today there is like 3% of our energy consumption that is really allocated for compute power. So all the data centers that we have in the world to store data, to do different things. And as you can see, this number is about to grow a lot in the coming decades. And I mentioned this PUE, which is like power usage effectiveness. Just to give you an idea, this 1.59 is the average number for the average data center. This number means that for every watt of electricity that you will put in your hardware, you need another 0.59 watts of electricity to cool down your hardware. That's like a traditional data center. With immersion cooling, you can decrease this number by 1.02. So you really need like not even like a tiny bit of energy just to cool down your hardware, because you really have like the ability to recover the heat, and really because you are like immersed in this oil, which is like a very good coefficient factor for like the heat transfer. So compared to I mean, of course, we're like playing in the world where, I mean, our competitors are Amazon, AWS, is like Google, is Microsoft Azure. So it's like it's a big market, and we are a very tiny player. But the idea for us, I mean, we have like this a few innovative approach. So first is the decentralization. This kind of bath that you saw can be like installed bits everywhere. And this is really like this decentralized approach, which is different than the big data centers that Google, Facebook, or all these companies are building in like very specific places. Where, by the way, in these specific places, it's very difficult to recover and to reuse the heat that will be generated. The Deepsquare project is like blockchain driven, so that means we really have like the way we are billing our customers, we use like a blockchain approach, really to make sure that that every seconds of compute allocation for a customer will be charged exactly for what it has been consumed. Again, sustainability first. So that's a little bit like what is different from like the big actors in the ecosystem today. And yeah, so this Deepsquare project has really like these 4 different pillars. So we have like the hardware that you saw in this like big bath. Then of course hardware on itself is not very useful. So you need to have the software and some applications that can run on this hardware, which is like what we call the marketplace. So that means right now we have like our own solutions. So you can train an AI, a machine learning model. You can do like different things with this solution, but it's a marketplace. So this will be really open to the community that wants to, I don't know, that have an application that needs compute power and that can be useful for their customers. Again, we have like this. The way we build people is made through the blockchain. So we reuse the blockchain technology for different aspects, and we have like created this token for like different purpose. But the token. So we did an ICO. We are actually still doing an ICO. So we had like this. We started last summer the first pre-sale of our ICO. which has been quite successful. We raised $2 million in less than 3 months, so we were like pretty happy about that. Right now we are in this second phase of the ICO before we go in a public offering. And this token, I mean, the token holders, the people that invest money in the project, they receive like tokens. And these tokens, it's like if you would purchase like an apartment, you have a token in exchange, and every time someone will pay you a rental on this apartment, you will get a fraction equivalent to the number of tokens that you have that will be rewarded to you. So basically, every time we have a customer that is using our compute power, the token holders will receive a dividends or a part of this revenue, because the hardware belongs to them basically. And this token also allows you to participate to votation and like different things that you can see in a lot of blockchain projects. So again, we have like 4 different actors. So applications, some of them are ours. The idea is also to onboard some other people and really to create an ecosystem. We have like the users. So of course, a data scientist that needs to train model. They don't even really know or care where the compute power will be, where the origin of the compute power will come from. Although there is like very important aspect of data security and where are they stored, etc. The facility providers is really like the places where we are installing this smart pods, so this bath with our hardware. And we have our token holders that owns the hardware that we build for them. I'm about to end and just like quickly present you our team. So in the Deepsquare project, Berat and I are board members. I'm head of sustainability. We have different people around us from different backgrounds. Lilo here on the right was here from the beginning. He's really like the tech guy who loves to hack the hardware and to make it like more efficient, etc. He's really like our HPC architect. And we have Sergio, who was like a vice president at Oracle in Europe, who brings like a lot of years of experience that we of course don't have, because we've spent our entire life in the startup world, and we come to a point where we really need to onboard some people who can think about scalability, about the industry, etc. And yeah, it was really super important to onboard this kind of people with us. And yeah, different backgrounds, people from marketing, finance, etc. Like most startups.
So how many employees at Deepsquare right now?
Well, at Deepsquare, I think with like all the different teams, and we have like some freelancers as well. So we are approximately 30 people.
All right, that's awesome. All right, so if you're done, Fred, I think I'm just gonna allow Berat to give his presentation.
I'm actually gonna.
Yeah, you wanna go there?
You want to switch?
Yeah, sure.
It's up to you.
Everybody can hear me? It's all good?
No.
No.
Right.
I close.
It works now.
It works? It shouldn't, because I'm
It
going to
works.
use this one.
Okay. All right, so Berat is going to introduce one of the applications that will be running on the Deepsquare hardware, actually. So this is going to be really interesting, something that is closer to what we do in finance. He's going to talk mainly about a high-frequency trading algorithm on Bitcoin that they developed with his startup. So please get started whenever you want.
Thank you. Good evening, everybody. I first would like to thank to the management of Florida International University. It doesn't work?
A bit higher.
Better?
I think so.
Thank you for this kind invitation. We really appreciate it. And also thank you, Florent, for this great hospitality. We are actually really happy to be in Miami, except the fact that it's been windy for the last 2 days. This is not what we have been told before coming here, but hopefully tomorrow it's going to be better. Today I'm going to change the direction of this conversation from, let's say, business to a bit of technology, because Fred is representing our business side, and I'm trying to represent the technical perspective of the Deepsquare project. Today, I will also give you a bit of, let's say, a short summary of my experience in business. I'm actually coming from academia. I did my PhD, etc. And then I have some, like now, 2 or 3 years of experience in the startup. So that's what I'm going to talk a bit. And after that, I will try to give you a condensed version of a lecture series, like a 14 weeks lecture series that I was giving during my PhD at EPFL with my supervisor. And then I will also show you how this lecture actually inspired me to develop high-frequency trading that was asked for from one of our customers. I try to avoid the technical details, so I'll try to make it like a story that you can actually see, let's say, the development of the high-frequency trading algorithm we did. So I did my bachelor and master degree in Istanbul Technical University in Turkey. I actually started my, let's say, journey by having an interest in analog VLSI circuit design. I found it just like it's a beautiful puzzle. But then I had the chance to meet with my previous supervisor, who actually was leading a neuroscience modeling and research group, and she introduced me the idea of neurorobotics. Actually, I got it very, very exciting, and then based on this enthusiasm, I went to Switzerland to do my PhD at the École Polytechnique Fédérale de Lausanne, which actually Fred did his master there. And I joined a project called Blue Brain Project, which was at that moment the biggest funded European project. The aim was to artificially simulate human brain in high-performance supercomputers to try to, for instance, understand how human brain works. And that's actually the point where I got involved in high-performance computing. So after that, finishing my PhD, I joined my co-founders to initiate a startup called Alpine Intuition. At Alpine Intuition, we have 3 pillars. The first one is developing a machine learning model deployment platform. This is our main product that we are focusing. But on the other side, we also provide service to, let's say, small and medium-sized companies ranging from Nestle, ACU Means, and pharma companies. And at the same time, I'm still continuing my research about neurorobotics, which I've been actually granted a fund from the Human Brain Project, where now we are trying to develop a simulation environment to couple, or let's say, create a simulation environment to create a digital twin of human body and attach the assistive robotic devices and then study neurorehabilitation. So we are trying to prepare this simulation environment for the exoskeleton companies. And a couple of months ago, as Fred mentioned, we also started our journey about this high-performance computing as a service, which is called Deepsquare project. So let me give you a bit, as I said before, my journey in the startup area and the company that I've been involved, which is called Alpine Intuition. We started the Alpine Intuition in March 2019. And it was actually a beautiful time because Alpine Tech, as Fred represents, they were actually looking for diversification of their, let's say, hardware. So, and then after discussing several points, and we had an agreement that they can actually give us the seed money, therefore we can initiate our company, as well as they provided us the infrastructure, which allowed us to have no capex for the infra. So it was like a beautiful start for us. So actually Fred is my investor, but then after a couple of years, he became my partner. And it's actually the same story that you're going to hear for the Deepsquare. Actually, Fred mentioned it already. Our latest investors, Sergio, Mark, and other people, they came as an investor, and then they became a partner. So we actually founded the Deepsquare with our early investors. So by 2019 in the Q4, we actually released our first, let's say, proof of concept in the model deployment tool. And then we actually satisfy, let's say, 10, 15 pilot clients. And it's actually like, let's say, try to understand what the clients need. So that was like the initial phase, as is the case in most of the startup companies. And this year, what we realize is that actually, for instance, Fred is involved in another startup, which they were trying to develop machine learning training platform. And at the same time, we were trying to develop machine learning deployment platform. So we said, okay, and we also have this high-performance computing interest. We said, let's actually merge these two companies and then come up with actually a unique machine learning pipeline that is actually specialized for the high-performance computing. So now we are merging with this Alpine Intuition and C-Square is merging, and then we are now becoming a Square factory. And our aim is ranging, let's say, 18 million Swiss francs revenue by 2027. I think it's a bit conservative, which is like representing just less than 1% of the total market. So I talk about this model deployment a lot, but what does it mean? So we have a quick video to give you the idea what does it mean to have a model deployment for machine learning models.
Deploying machine learning and AI algorithms can be quite frustrating for data scientists and AI companies. Today, deploying ML and AI at scale takes on average 1 to 6 months and will cost you between 50 and 150,000 Swiss francs for a proof of concept. On average, data scientists and machine learning engineers waste a third of their time deploying models, which is not their core skill and can be very frustrating. Finally, deploying yourself often results in huge unnecessary cloud costs. Up to 70% of costs are due to oversized and idle instances. That's why we built iSquare. To really understand what iSquare is compared to other cloud providers, imagine that you're in e-commerce selling t-shirts. For logistics, you need a place to ship from. GCP, AWS, and other cloud providers would rent you a nice and big empty warehouse where you would have to install everything and hire employees to make it run. Lots of work and lots of costs. With iSquare, what you get is a prepared warehouse, fully automatized with robots, and that is only missing your t-shirts to start shipping. With iSquare, you deploy your model as a scalable API in a day instead of months. Starting at 50 Swiss francs per month, you can deploy your model and use it more than 10,000 times. And for any additional uses you could need, you pay a fixed per second fee. No more paying for oversized or unused instances. So for the price of 2 pizzas and 2 beers, you have your model deployed into a fully scalable API ready to be delivered to your customers. So reach back to us or join us in one of our bi-monthly webinars to try iSquare.
So as I said at the beginning of my talk, in Alpine Intuition we have three the pillars. And the second one was the service. So what I mean by service is some clients approaches us and then they're asking machine learning service for their ongoing projects. So it's like let's say, transformation of their data processing, or I don't know, for some pharma companies, they want to come up with some drug discovery solutions, etc. For us, the reason why we are providing this service is that we would like to have the market interaction. So we've been trying to develop a tool to be used by all these companies, but actually it's very important to understand, is it something that they would like to buy, or is it something like, if there are features that they would like to see in this product? That's the reason why we've been engaged with these companies, like a strategic decision. We are trying to understand what they are looking for. So one of the projects we did as a service was this HFT project. A client approached us, and then this is actually already having an algorithmic training, and they asked us, we would like to improve the quality of their solution. So they said, like, we had several discussions, and they were just looking for the improvement. So we came up with some idea that I will try to present today. And then we convinced them, and then we initiate this service project again. So while we were developing this service project for them, this AI high-frequency trading algorithm, what we realized is that there is a very important barrier that actually stopped us to move faster enough, which was the computing power. So the model that we developed, it requires continuous training. So because the market changes, the dynamic of the market changes. Therefore, the model that you trained, I don't know, for the last 2 months training data, it doesn't mean that it can serve a good results for the upcoming next two weeks or two months. Therefore, you need to have like an ongoing, which we call continuous integration, ongoing training, ongoing testing. So it has to be like continuously developed. Therefore, it requires a lot of computing power, which at that moment we didn't have. And that was also, for instance, let's say a feedback we were receiving from our customers that actually lead us to create this project that Fred explained, the Deepsquare project. That's one of the reasons why we actually engage with this high-performance computing, because we saw that there is a need in the market. So what is this Deepsquare project? As Fred mentioned, he mentioned the business perspective. So I will just try to give you a bit of idea of the tech perspective, but I will not try to bother you with all the details. So in Deepsquare, what as Fred described, we are trying to help people to solve the real-world challenges that requires intensive computing. And what we believe is that, as also again Fred mentioned, the market is all, let's say, captured by big tech. And these are all monopolies. But at the same time, there is a frustration on the customer side because there is a lack of transparency. For instance, when you try to get the computing from these providers, you actually don't know what you are using, how long you are using. Like you are allocating an hour of computing power, but you are actually not sure you are actually really using full of it. So there is like a lack of transparency. Sometimes our customers were saying that they receive such a ridiculous amount of bill that they actually cannot understand why they receive such bills. So these are like frustrations we observe in the market. And at the same time, there were like concern about the fairness in the prices, because if you are like only one in the market, you can decide what is the price. So what we are now, let's say, providing as a value proposition is that we would like to have Deepsquare be owned by the community. That's why it is based on blockchain. And also, we will be writing down the proof of compute. That's what we call, like how much CPU has been used, how much GPU has been used, what is the data storage has been used. This is all going to be written in a smart contract. And therefore, it's also like going to be open source. Therefore, all the community developers, they can see what we are trying to provide. Therefore, they can actually really validate the proof of compute. And it's going to be like open to everybody. Whoever wants to see which customer paid and for how much usage, it's going to be all open to people. Therefore, we will be addressing the lack of transparency and also the fairness in the pricing. The Deepsquare project, as Fred mentioned, has like 4 layers, starting from the hardware. And on top of that, we ourselves developed a software that we call Deepsquare Cluster Manager. It's a software that orchestrates the infrastructure. Like how do you allocate the jobs that are coming from different applications, as Fred again mentioned. Like it's going to be rendering, it's going to be AI, it's going to be, I don't know, different type of workload. This is all automatically managed by the software that we have written. And so these 2 bottom layers, they are constituting the Deepsquare grid. And on top of that, we have the customer portal, and also we will have a marketplace where any AI startup can actually join us and then become a part of this ecosystem, and then they can actually create the links between each other. Therefore, they can actually grow together. So that's the principal idea behind the Deepsquare project and the marketplace that we are going to start the process. So, Fred said that the hardware is immersed, so it's in the oil. So actually, I have a video to prove that. So now I can actually start after this short introduction about my business background. I'd like to start the lecture. I call it lecture because really it was given as a lecture series of 14 weeks to master level students back at the PFL. You might ask why you are giving us a lecture. It's actually this lecture, as I said, inspired us to develop this high-performance trading. That's why I wanted to briefly mention and then give you this condensed version of this lecture. So, and also the idea, all the algorithms that I'm going to talk today is actually based on the studies in neuroscience. Like those are like inspired from the brain. and how the brain works. So the first one that I'm going to talk about is called learning of sensory representation, which means like how we perceive the world, like how the information that is coming from all of you, for instance, to my eyes, how this information has been processed in the retina, and how, let's say, scientists came up with some algorithms that represents this image processing, that allows us to see the world, and then how they use this idea to, for instance, recognize objects in the machines. And then once you perceive the world, actually the next step is doing and having an action, which means that you need to make a decision. And then the topic is how you make this decision. What kind of process we have in our brain that allows us to make a decision based on this information coming from, let's say, all the sensory information. I hope it's going to get more clearer on the way, but I can see some suspicious eyes that like, well, what do you mean? Like the seeing, I mean, the retina and the I don't know, the decision-making process is going to lead to high-performance trading. Give me some time, please. So let's start with the sensory representations. Back in 1950, Frank Rosenblatt, he created an electronic circuit, literally electronic circuit. You actually can't see the transistors. Those transistors represent the retinal neurons, and all these cables, they represent the synaptic connections. So what he was trying to do is he was trying to replicate the human retina with the knowledge that we had from the neuroscientific experiments. And this is the knowledge we had at that moment, so he just tried to replicate the retinal organization, the neural network organization. And interestingly, what he found is that this network has the ability to classify objects, meaning given a certain image type, like for instance dog, this dog image was only triggering certain synapses, which was actually leading circuit to actually identify as a dog. And at the same time, if it was given a cat image, again, this time the other type of synapses were getting triggered, and then it was leading an identification of a cat. So he found out that actually this perceptron, what he calls perceptron network, which we observe at that moment, I mean, at the knowledge we had back in 1950, actually is a classification algorithm. So let's move on from 1950s and come to the 1980s. A Japanese scientist, Fukushima, he published a paper called Neocognitron, a self-organizing neural network model. And in this paper, he said, the network that I'm proposing is self-organized, meaning there is no teacher. It just learns by itself and acquires an ability to recognize stimulus patterns based on the geometrical similarity. Again, he was actually trying to replicate the retinal circuit. But this time, 1980, we had more information about the organization of the retina. Therefore, he actually managed to place the real cells that we observe in the retina, which he calls C cells and S cells. Actually, in fact, in retina, it's been found that there are simple cells and complex cells. So with this knowledge, he moved on. Instead of classifying cat and dog, he actually managed to solve handwritten digit recognition. So the network, when it was given, like some handwritten digits, it was actually identifying what it is. It was saying it's 8. So let's move on and come to 1998. Yann LeCun, who is now the leader of the Facebook AI, he published a paper. He moved on, and he actually, he's the first one actually identified and accepted to propose this specific neural network called convolutional neural networks. His idea, again, moving on the retinal, let's say, modeling, and he actually make it a bit more realistic, because what we are observing is like the time is moving on. Therefore, the experimental studies are bringing more information about human vision system. Therefore, he's able to actually make it better in terms of modeling. And also what he was, let's say, why he was a bit in a better position is that the computing power has increased. Therefore, he actually could run this algorithm for a longer time. Therefore, he actually get more realistic applications. So his algorithm now able to identify cars, truck, I don't know what else we have, airplane, etc. Actually, this convolutional neural network is now the base of self-driving cars. So what I'm trying to say is that when we try to replicate the human vision system, put it on let's say, supercomputers, we're actually giving the machine to actually see the environment and identify objects in the environment. So now let's talk about this pioneering work. I remember this day, 25th of February, because my supervisor sent me this paper and told me that you better understand this paper very well, otherwise you cannot graduate. So why it was very important, because they are the first one to combine this convolutional neural network that represents the human vision system with the deep reinforcement learning, which that I'm going to talk about later, represents how we decide, how we make our decisions. So they combine these two approaches. Actually, you can think of it like a computer who can see is just looking at this Atari game. I don't know, you remember it from 1990s. And then he's trying to make some decisions based on this deep reinforcement learning that is inspired from the human basal ganglia, and then trying to control a joystick. It's all computer that we are talking about. And this is the state knowledge, let's say the state memory of the computer about this Atari game. And let's have a look at how he is playing this Atari game. So at the beginning, as it's not surprise, there is less training. There's less, let's say, trial and error. It's failing. But the more they train, we are talking about running like a very big supercomputer for, I think it took them more than 2 months to train these models. So all these, like, we are talking about millions of synapses. It's not a couple of synapses we are talking about. But what is interesting in this video for me is this part, where you will see that at the very end of training, the algorithm is becoming very successful because it is finding a very interesting trick to send the ball to the corner, which is exactly what I was doing when I was a kid. You know, I was trying to send it to the corner. Therefore, I don't need to do anything because it's just like running on the top and making the game to make it to win for myself. And now I actually reveal how old I am. Sorry. So I don't think a lot of people have played this game. So let's move on. The other example. We are again talking about the same principle, like this computer vision that we are putting on top of this model, this human decision-making process. Actually, it's similar, same authors. What they did is they this time play Go, which is very popular in the South Asia, and actually they beat the existing grandmaster at that time. So this algorithm, that what you see, these two networks that are trying to see this Go play board, and then trying to make this decision by this deep reinforcement learning. And actually, really, they literally beat the grandmaster. It was like there is a documentary about it in Netflix. Now I made a advertisement. I hope it's allowed. The last one that I want to talk about is because I have a very keen interest in robotics, and also I found it's very, very, very interesting. These guys, what they did is maybe all of you know this Rubik's Cube problem. So they give this cube to a robotic hand, and let's hear what they did.
We're trying to build robots that learn a little bit like humans do, by trial and error. What we've done is trained an algorithm to solve the Rubik's Cube one-handed with a robotic hand, which is actually pretty hard even for a human to do. We don't tell it how the hand needs to move the cube in order to get there. The particular friction that's on the fingers, how easy it is to turn the faces on the cube, what the gravity, what the weight of the cube is, all of these things, it needs to learn by itself. The interesting thing is that kind of standard techniques in robotics haven't been able to scale to that complexity that we see in a robotic hand. Humans have evolved to be able to manipulate and operate our hands. So there's a huge amount of learning that's happened through evolution to get us to this point as a species. And the robot has to learn all of this from scratch. Instead of trying to write very dedicated algorithms to operate such a hand, we took a different approach where we create thousands of different simulated environments and learn to do the task in all of those. And hopefully, a robotic hand will be able to do it in the real world as well. This means like thousands of years of experience that this neural network has had in simulation. Every time the algorithm has gotten good at the task, we make the task harder. That's really crucial because it needs exposure to really complicated environments in order to eventually be robust to the real world. You put a rubber glove on the hand and can still carry out the task. This ability to generalize to new environments feels like a very core piece of intelligence. It really changes the way we think about training general purpose robots. Moving from thinking too much about the actual algorithms and start thinking about how do we create complex enough worlds where they can learn. At some point, then it would be more down to the imagination what robots could actually accomplish. The hope is to build robots that can do many different tasks to increase the standard of living and give everybody a better life.
So let's now talk about the deep reinforcement learning part that I was mentioning, this skill and behavior learning. Before going into some, I'm not going to go into details, but before like scratching the surface of the reinforcement learning, I would like to mention what is machine learning, let's take a general aspect. There are three approaches in machine learning. One of them is called supervised learning, and then we have the unsupervised learning, and then the last one is reinforcement learning. So most of you maybe know the supervised learning. The idea is that you actually tell the machine what is the supervised signal. That you are a teacher and you tell almost everything to the machine. And in the case of the unsupervised, it's completely opposite. There is no supervised signal. You don't tell anything to the machine. But what you do is you try to craft some mathematical formulations, and then you expect that those formulations is going to lead you to something that you are looking for. One of the examples is, for instance, clustering in the data. So you don't know what you are clustering. Therefore, you cannot say. You don't know what are the clusters in your data. So therefore, you actually need to rely on the equations that you are writing, which is going to lead you to the clusters in the data. So that's why it's two different concepts. And the reinforcement learning lies in the middle. We don't have supervised signal, but we have global information. Like we say what is good, what is bad. All the examples that you saw in this lecture, there is always a global signal, which we call it reward or punishment. And it's like sometimes a scalar signal, which means like you only say, yes, it's good, or yes, it's not good. You don't give her granularity, for instance. But at the same time, reinforcement learning uses a lot of, let's say, tools that unsupervised learning use. That's why it's actually in the middle. And the reinforcement learning theory, as I said before, it actually relies on some neuroscientific experimental studies. It has been found that the basal ganglia circuits, it's like right in the middle of your brain, it's actually running as if similar to the reinforcement learning. The way that we learn in the basal ganglia circuits is actually very similar to the formulation of the reinforcement learning. And it has like sources in, I don't know, a lot of disciplines coming from neuroscience, computer science, the mathematics, and then psychology as well. So I just want to give you a tiny little example. So actually this is, I did this experiment during my master thesis in the robot. So that's why it's a bit sensitive topic for me. So what you see here is that we have a mouse, and the mouse needs to find the cheese, which is somewhere in the corner. She doesn't know where it is. But there are also in some corners, there are some electric shock. So this mouse, how can she find out the cheese? It's exactly reinforcement. There is a global signal. There is either one, like positive signal, somewhere which represents the cheese, or some negative signals, somewhere in the world, which represents the electric shock. So the mouse, what she does is like she just randomly moves around, and then she tries to find the punishment and the reward. Which one is going to come first? We don't know. It's just by luck. But by doing this trial and error, and then getting this global signal, okay, if I go there, actually there is a punishment. Or if I go there, there is like a cheese that I'm very happy. Then it starts building some internal state about the maze. So by doing this, you are actually allowing the mice to, let's say, cope with the changes in the environment. Because he's not trying to memorize the exact path. Okay, he's like, if I take like 4 forward and then 2 right, there is a cheese. No, what if I put the cheese somewhere else? So then she needs to go through all these examples again and then use the previous knowledge that, okay, actually there was this shock on the corner, so better not try there. And then explore the other state, for instance. So her idea is always trying to build some memory, but like a general memory. So that's the basic, let's say, explanation of the reinforcement learning. There is not like a complete and direct supervised signal. You just learn it by interacting with the environment. Yeah, we call it, okay, these are like very the academic details, I would say. So, and then the major goal is we are trying to maximize the future reward. And there is, as I said, no supervisor. There is only a global reward signal. And I also want to give you another example of how reinforcement learning works. Instead of giving you the technical details, I decided that maybe it's better to show you the idea with the videos. Let's have a look. So here, what you are seeing is an implementation of the reinforcement learning on robotic applications. And the global signal is just move forward, nothing else. Okay. So it's like there is only one global signal. We say your goal is moving forward. If you manage to move forward, you get some reward. So, and all these robots, what they are trying to do is they are trying to actuate their actuators. Okay, they have like different actuators in all the joints. They don't know how much like torque they need to produce in order to generate a forward movement. They are just trying. They are just trying. Okay, and then when they hit, let's say, a bit forward movement, they are receiving a global signal. Oh, you are doing something good. So this is, for instance, what you're observing after, like, again, 10 days of training of the neural network. These guys are walking like this. So you will also see that the reinforcement learning actually find that this is the most efficient way to walk, if you believe so. I mean, if you look at the mathematical, like the results, like in terms of the let's say efficiency, like how much energy you are consuming, it's really the more efficient way to walk. Like you need to, I don't know, move your arms like this. So with all the jokes aside, what I was trying to do so far is that let me try to give you the analogy. Now I'm going to start the high performance trading. In the world of high performance trading, we actually, like, it's like a very hot topic, right? There is a lot of companies that are trying to come up with the best high performance, high frequency trading algorithm. And there is like a very, very dense competition. For us, what we thought is that, okay, like, as a human, it's not like something that we can capture. Like there is like some patterns in the, I don't know, fluctuation of the price movement. And those movements, like for our eyes, it's actually too complicated. Also, like you don't need to just only consider the price movement. Maybe you can also consider other type of data, like maybe Twitter data, maybe, I don't know, all these classical, what's called, like that represents, for instance, what is the moving average of the price? I don't know. Like
Technical indicator.
Thank you very much. I'm getting a bit tired. So all these technical indicators, you don't know which one actually has the most value, right? And as a human, it's very complicated. And also, if you are trying to write an algorithm, you also need to define what is the data that you need to use, how much importance you are going to give those data. So we said, okay, we will define a global goal, and we say, I want my algorithm to maximize the profit. That's it. However he does, let's see, is it going to bring us something or not? That was the initial idea. And we also look at all these examples. Like they managed to solve the robot solving the Rubik cubes. They managed to let's say, beat the Go master. So we said, it's better to try. What we are going to lose? And our customer actually got very excited. That's how we initiated this project. So essentially, in our algorithm, what we are doing is that we have this convolutional neural network that is literally looking at the data. And then after that, this data is being processed by reinforcement learning to define, like to make a decision, which I will explain, and then try to maximize the reward. For several moments, we actually, I will also show you, for a human, he actually does something very, very opposite. And what we don't care, because as long as it maximizes the profit, we are all happy. So, as I said before, this is like a very hot topic. I mean, a lot of people trying to come up with a, I don't know, automated trading algorithm. For us, it was just like, okay, let's give it a try. Combine this convolutional neural network and deep reinforcement learning, and then maybe we can come up with something that is, you know, powerful enough. So, and again, as I said before, we have several different data sources. And we didn't tell the algorithm which one is the most important or which one has what kind of, I don't know, constant in front of it that represents the, I don't know, let's say how important that data source. So it's all decided by the algorithm itself. As I said, like it can be, we use some stock price, like the balance, the shares, and the technical indicators, etc. And the idea was that we created let's say a simulation environment. We literally try to, let's say, put it into a simulation framework where actually we place a artificial broker, and the guy was trying to just, let's say, take some decisions. Okay, I'm opening a position, I'm closing a position, and then it was just getting some reward because we have the real data, right? If you open a position now which is going to lead to loss, we were just giving loss to the system. Or we were just giving a positive signal to the system if it was a correct decision. So that's how we trained the HFT algorithm. So we used Bitcoin and Ethereum, historical price from 2018 and beginning of 2018 and July 2021.
One quick question.
Yes,
Which
please.
one did work better, Ethereum or Bitcoin?
We have a very interesting story about that. We first trained on Bitcoin because that's what the client's interest was. And then they called us like on Monday morning and said, we need the model that is running for Ethereum. When? Actually today. I said, what I can do is I can actually use exactly the same model that I used Bitcoin to train, and then I apply it to Ethereum, and let's see what's going to happen. It actually provides like 80% of the performance. If you ask me why, I have no idea. But of course, like 80% is still, you know, less than 100%. But after he started using the signal, we also did the training, like proper training for Ethereum as well. It's a very classical method in machine learning. You split your data by like 60, 20, 20%. The first 60% is going to training. It doesn't mean that, I'm sorry, I said first. It doesn't mean that the first chunk of your data, you can actually mix your data and then provide the 60% to training. And then you use the 20% to validate. What does it mean is that sometimes we call it overfitting in machine learning. Sometimes when you train your data, it might become very biased to some certain decisions. So you need to, let's say, surprise the model time to time. That's why we use this validation data. And the remaining, actually, we were just making it run real time to test the results. So as I said before, the key element of our, let's say, solution was that we turned the time series data. We are talking about time series data. The price, all the technical indicators, they are all time series data. How can you see a time series data? So that was the main trick that we used. We actually transferred it into like a 2D array, which became, let's say, a pixelized information about the market conditions. Therefore, the convolutional neural network actually was seeing. So that was the main trick that we used. So as I said before, we have 3 options to do, like the algorithm can buy, hold, or sell. But at the same time, the algorithm has the ability to create a short position. So it means that like it can actually sell an asset, sell the Bitcoin even though he doesn't have it. So it just shorts the position. Or it can like, make the long position as well. And we had 2 different network architecture. One we called actor network, which is responsible for taking this decision. And the other network we called critic network, which is the network that evaluates this decision. Is it a good decision or a bad decision? So there's always a closed loop feedback system in the network. So let's talk about some let's say snapshot of the algorithm, what he was doing. So now we are talking about a very, let's say, stable price moment. It's like fluctuating only $50, right? In this market conditions, actually, maybe I can also state that the green means that the algorithm is now opening a position. It can be short or long. You can understand it by looking at the following signal. So here, for instance, the first one is green, and the next one is orange, which means that it's actually opened the short and then closed it with a profit. And it followed like a short, and then it opened a long position. But what is interesting is here, actually, now the market is all of a sudden create a very sharp upward moment. And at the beginning, it creates very nice long positions and then start opening short positions. As a human, I would never do that. I would think that the Bitcoin price is going to go to 11,000. Right? But actually take the risk. For me, maybe it wasn't a risk for the algorithm. But he didn't believe that it's going to go up. It starts the opening the short positions in the market. And it's the same behavior do you observe in the, let's say, downward trend. It's like constantly it was opening short positions and even capturing some long positions during this sharp the price down. So this is like just some snapshot, right? We are talking about like 3 years of the testing of this algorithm. So I'm just giving you, I don't know, 4 minutes. So I just pick some random, let's say, snapshot of the model. But let's talk about the overall performance. This was a request from our customer to, let's say, give them some statistical results. So they are also interested in like a very constrained solution. So they were saying like, my algorithm, the algorithm has to close the position with an $8 move. They don't care about like $50, $100. So they were saying that, no, I want my positions always closed with an $8 move. So what we did is we actually tried to see what is the best, let's say, stop loss condition. And then what we found is that for the bull models, it was like the best one was opening at $20, so placing a $20 stop loss. But on the other hand, in the bear model, what we observe is that actually putting a $50 stop loss was the best. So this is actually showing that it doesn't mean that the one single model is always going to work best. So this shows that depending on the market conditions, you actually might need to change the let's say, the structure of your of training as well. And now another snapshot of the performance of the model. Now we are seeing like almost 22 days. And the blue is the price of the Bitcoin, and the red is the reward that we are receiving. So as you see, like it's an almost constant increase in the 22 days. And so let's conclude. We try to design, let's say, a neural net. We try to design a high-frequency trading based on these 2 computational models that I explained: this computational visual model and the reinforcement learning. we actually realized that the performance was extremely heavily relied on the pre-processing of the data, which I mentioned, this turning this time series data into the 2D image. That was the key point of the performance. We also, as I said, like a tiny little joke, like the existing actually model was capable of being used in another assets without even training. But at the beginning of my talk, as I mentioned, like it requires a lot of computational power, and it requires like a beautiful machine learning pipeline, which means you need to train your model, you need to compare your model in the current market conditions, and you need to immediately deploy it. Like you don't have a chance to wait, I don't know, 1 hour, because the market conditions are changing very frequently. That's why this was, for instance, one of the inspiration to launch this Deepsquare project, to address this need in the market. Thank you very much for listening. I hope you enjoyed it.
All right. You want this one? Yeah. All right. I have to say that it's been 5 or 6 times that I hear about both of your presentation. I'm always as excited about the project, if not more. So what we're going to do now is take some questions from the audience. Maybe you have 20, 30 minutes. I'm going to try to be as fair as possible. So is there anyone that want to ask question to either Fred or Berat? All right. Yes, please. Go ahead. Oh.
Hey everyone. So how do you think the machine learning will affect the labor market?
Sorry.
How do you think the machine learning will affect the labor market?
Oh, we had this discussion actually in the lounge. It might affect it very badly. Like some people might lose their jobs just because I'm like dedicating my life to develop these tools. Yes, there is like a high probability of change in the labor market because of the development in the machine learning. But what I also believe that it's like a part of like the evolution of the human, which means that maybe we need to come up with better or high quality jobs. Like maybe we just need to replace the jobs that is not giving any satisfaction to people. But we also need to be very quick to replace those labor conditions for, I don't know, people losing their jobs.
Thank you.
Anyone else? Yes. Do you want to come here? Yes. Yes. Okay.
Thank you very much. That was enlightening and riveting. Another general question. What do you think the impact of quantum computing, especially when it comes to cryptography, how's that going to affect all of these crypto coins?
Very tough question.
Sorry, it's on my mind.
Now, what we are looking for is actually another excited moment. I mean, we are now going to see some, we are going to observe some like paradigm shifts in the computing, which is going to come with the quantum computing. I must say just that I'm super excited because, like, you know, I'm dedicating my life to technological development, and it doesn't mean that I'm going to stuck to like classical computing facilities. No, if I see like something is changing, I would like to be participate, and I'm like trying to closely follow the development in the quantum computing. But it's not like direct in my field, therefore I cannot like give you a more comprehensive answer.
How about you?
Yeah, I think it's a very good question, and of course the quantum computing or the people developing this kind of technology were already pointing some fingers on the blockchain and say maybe with quantum computing we could bypass the security of the blockchain and like trick this kind of algorithm. So I think we still have a little bit of time. I know that this field is pushing very hard, and this will clearly be something that will be part of our life in few decades ahead. But I think in the meantime we need to really like provide some intermediate solutions, and I think this whole work that we are doing will be necessary until we reach these points. But yeah, again, and I really understand the question because it's something that's and again I'm trying to learn a little bit about quantum computing, which is like very tricky and clearly not my field, but. Yeah, I think it's a very right question to ask.
It's a very bright future for you. It might not be so bright on the blockchain stuff because
we will
cryptography cracking.
I agree.
In an instant is difficult.
Correct.
But absolutely, in terms of machine learning, I just catapulting it to the point where I mean, the machine learns like us. It just does that millions of times faster. So it can learn what took me 50 years to learn in 36 hours. So what happens 5, 10, 20 years later when that machine continues to learn? It's fascinating.
I agree with you.
Thank you. Terrific.
Thank you too. Thank you.
All right, anyone else? Yes, I think you were next.
Well, thank you guys for coming in. It was very interesting. I have two quick questions. One pertains to Bitcoin and one pertains to Ethereum. So starting with Ethereum, obviously with the NFTs taking off, it's really congested the whole thing, and gas prices obviously are one of the biggest prices with Ethereum. My question is, number one, does that pose a problem for miners? Does it make it more profitable? What's the solution to overcome that congestion? And then my second question, I'll do the second question after that response.
I think it's it's a very good question, and the NFTs and this whole ecosystem is really linked to that. The gas fees, like you mentioned for Ethereum, it's a big problem today because Ethereum went so fast and didn't really have this ability to scale. So I think right now the Ethereum, like we know, that is a proof of work. So really, that needs these miners to provide this whole security is clearly not sustainable. And this is why I think, I mean, it's since the moment I started to mine, people were already saying, Ethereum 2.0 is arriving like in 6 months, in 3 months, in a year. So far, it's still not the case, but I think the more we go, the more the community really feel like we need to go through a proof of stake, and I really think that's in this direction that needs to go, because otherwise it will really block the scalability of Ethereum. And I think there is already some very interesting project like Avalanche that you maybe know, and that have use or be the problems of Ethereum today and actually make it like a very big opportunity.
For instance, we actually built the Deepsquare blockchain based on Ethereum, and I might say that it's giving me a lot of headache, this gas price. We are just, like, for instance, trying to follow up the development, like, let's see what's going to happen with the Ethereum 2.0. And I'm seeing the Ethereum on your t-shirt. I think you are a believer of the 2.0. I don't know, what would you like to say? Now I'm going to revert the question to you, if I may.
No, I mean, absolutely. I mean, Ethereum's incredible. Obviously, like I said, I mean, I'm interested in kind of a lot of the NFT stuff and kind of what's just going on in the platform, like the Pulse chain stuff. Yeah, it's incredible. I mean, but the gas prices, like I sent my father $500 USD, and Ethereum would cost me $30, which is unsustainable from a standpoint of, I mean, what are we trying to do with the platform? My second question, I know you guys you're involved with Ethereum mining, but my question pertains to Bitcoin mining, and it's as follows. So, with Bitcoin, obviously, as we know, there's going to be a 21 million cap. It's predicted that will hit in 2140. Obviously, the incentive for miners is Bitcoin. The hash rate right now is, I think it's like 12 Bitcoin every 10 minutes or something like that, and it increasingly is getting less and less, which is what makes it deflationary, makes the value go up. My question is what's going to happen in year 2140 when presumably all the Bitcoin have been mined? What's the incentive for miners to sustain the network and really keep it decentralized?
That's a good question. I'm not sure I really have the answer to that. I think the more we go, the more like the difficulty of Bitcoin mining will also increase, and I'm not even sure we're going to reach. Are you sure about this deadline of 2041?
It's
following the rate of today, right?
It's the hash rate, because it's 50% every 4 years. That's the cycle. So the first 50% of Bitcoin were created between the first 4 years, and then halving events every 4 years, and less and less and less. So if you do the math, presumably in 2140, the 21 million, like right now there's 19.5 million Bitcoin. So it's going to take another 120 years just to get the next 2 million. But
yeah. No, I think Bitcoin will have to adapt by then and to go through another proof of whatever. But clearly, this will not be able to be a proof of work anymore. I think it's almost like a philosophical questions that really question this whole idea about blockchain. What I can feel, and again, I'm not enough a technical person to have like the right answer here, but I think the industry today has way too much interest, the hardware industry. There is like a lot of money being driven here,
Right.
and I think this industry wants to keep this activity as long as possible. So I don't think I'm convinced that Ethereum really wants to move from proof of work to proof of stake and really find something that can scale. Right now, I think it's not the case for Bitcoin, and they will try to push it as long as possible because again, like it drives like a lot of interest and money. Yeah.
Absolutely. Thank you.
Thank you.
Someone else? Yes.
Hi, I have a question about, do you use or is it possible to use AI in mining the Bitcoin? Maybe is it possible to teach computers like GPUs to mine it faster and to be like maybe more efficient, to use less energy to process the same computing? What do you, I'm very curious about that.
Very interesting question. I don't know if
I mean, theoretically, yes, it is possible, but it depends on your interest. Would you like to dedicate your time to, let's say, investigate to find an answer for this question? It's up to you. Like all for instance, the examples I showed, the principle is the same, but as a researcher or as a, let's say, a machine learning engineer, you actually need to tweak it to the problem that you are trying to solve. So that part is the part where you need to spend a lot of time to make it perfect to solve that problem. So in this case, again, it's all about dedicating some time to investigate this possibility, which might like require, I don't know, communication in the very low level of communication between hardware and the algorithm to actually look at the feasibility of improving the solution. But for me, it would be whatever answer I would say. It could be very speculative, but I see, yes, it is possible to do that.
So it is possible that if like the computers learn to do it faster, you can use less energy and solve like all other issues.
Yep.
Maybe. Yeah. Okay.
Exactly.
Thank you.
Yeah, thank you.
Thank you. Someone else? Yes.
It looks like a very bad sign. You have a lot of questions.
Oh, yeah. Yeah, so it was an amazing presentation, and my question's about HFTs. So it's really during the learning strategy of you guys doing the HFTs, how do you bring volume in, or do you guys bring volume in during that?
We are receiving this data like a constant manner. Okay, there is a source that our customer was providing us, and the volume was again like these are a bit, let's say, business secrets that I cannot like unleash all the details. But
Yeah.
there is like we are really working to make sure that the volume is also integrated into the pipeline with some mathematical tricks. That's all I can say.
Oh, okay, okay. No. Thanks.
I'm sorry.
All right. Someone else? Yes. Oh, yeah.
On your solution, you talk to solve technical analysis. But what about fundamental analysis? Because this is something that can change, the strategy in a minute.
Correct. Again, this was a project that was like required by a customer. So they defined the scope of work, and they said they are just only interested in this part of the data. For us, I mean, if the customer is happy, I don't want to put more time to add more complexity into the equations. So we didn't actually investigate that part. That's what I can say. But that's why I cannot say whether it will improve the quality or it would actually doesn't make any change. I don't know the answer.
Thanks. Yes.
Hi there. Just wanted to say first, thank you both for this very interesting presentation. Very new in learning about a lot of this stuff. I guess the question I wanted to pose to you guys, because I'm curious about how both of you would approach this, is that with a lot of countries and the way that the world is kind of shifting nowadays with a lot of destabilization in a lot of different areas, there appears to be a growing necessity and movement for regulatory measures with mining of various cryptocurrencies. I guess one, how would you recommend, if you had a say, how that should be done and that ought to be done, as well as what ways do you think should the utilization of mining crypto and obtaining crypto in your own wallet be used for hedging bets against potential governmental failures or things like that? I'm just curious what your opinion is and what you would recommend.
No, I think the regulation in the mining industry, at least, has like big impact on everything. I mean, China banned mining less than a year ago, and then suddenly like a lot of miners had to find like some new places, some new spots. This has really like that's had really a big impact on the industry and like a lot of different countries. I think this was also a very big opportunity for other countries, Kazakhstan, Texas, that we mentioned, that is really like becoming like one of the main spots for mining. At the same time, I think this regulation was really necessary, not only for the mining, not only for the crypto, but really for the blockchain itself. It is something that is really new. That is also a bit scary for the old or the traditional finance world, and I think 2019 was a very key period, and at least in Switzerland, where we could see really that the ecosystem was moving a lot. Like the equivalent of SEC in Switzerland was really like discussing with like different legal entities. Because I think we've passed the point where we say, okay, it won't be like either the traditional finance or like the blockchain or cryptocurrencies. We all have like to work together and to make sure that we can collaborate at some point. So yeah, I think this regulation aspect was something extremely important at this moment. I don't know if this answers your question.
Yeah, no, it does. I guess one thing I wanted to, ask as well, building off of that, is I guess what ways have you at all been approached to work collaboratively in the stabilization of different governmental regulations and policies, or I guess, well, if you can share, like, have you been able to, and if so, what have you recommended, I guess?
In terms of, I'm not sure I understand the question.
Like me, what I can say is, for instance, we are based in Switzerland, right? And we are now running a blockchain project. We are very transparent to the regulatory offices. We are but the environment in Switzerland is maybe different than US. I don't know how it is here, but they take it case by case. So like gotcha. we are discussing what are we trying to do with the blockchain technology? Okay. What is the utility? What is the, let's say, the value behind what we are trying to do? It's all open. It's all like given to the regulatory offices, and then we have like a back and forth discussion. We try to enlighten each other, and then that so far there is no problem that we are facing.
Okay, so mostly it's just been through transparency. Yes. Okay, thank you so much. I really appreciate it.
Thank you. I think I forgot the right side of the room. Yes, Mr.
Great presentation. I have a couple of questions regarding, so as you guys mentioned before, with Ethereum and ERC20 tokens in general, gas fees are extremely high. Why would you recommend Ethereum instead of like newer coins, such as like Binance Smart Chain tokens, Cardano, Avalanche, or Solana for NFTs, for example?
I think we are not leveraging Ethereum or any other blockchain. Like we have absolutely no, let's say, comment on this matter. I mean, for us, we look at let's say these technologies from the utilization for our projects. Like we really need to have a blockchain that we would like to put our projects on top of it. We don't have any interest to build our own blockchain because that's not the core business we would like to achieve. Right. And then we just look at which one is going to provide the let's say the utility that we are looking for. That's all our like, it's like a very pure business decision we are doing.
It's not like it doesn't have any investment consideration or nothing else.
Okay.
And if I may just add, like I think it's like in every kind of industries, people want to see some references. So Ethereum exists for like quite some years now. So we know how it works. This is like an ecosystem, etc. But as we say, these kind of solutions, they are limited at some points. Some of them are unlimited, but I think this is really what the new projects are bringing today by like studying what are the references, what are the challenges, what is like unsuccessful with that, and like how we can come up with like these new projects. So we mentioned Avalanche, you mentioned Cardano, which is also very interesting project. But yeah, again, I joined this idea. We have like, we do not have it really.
Yeah, because personally, I've been invested in crypto now since I've been in high school, right? But you know, like now, you know, it was supposed to be like completely decentralized. But I've noticed that I mean, have you noticed that the crypto market has also been following like the same path as like you know, centralized routes such as the S&P? I've noticed that lately, a lot lately, that you know, the crypto market goes once you know, there's good
There's a
news
high
around
correlation, no? Yes.
Yeah, there
I
is a
also
high-
found it
there's-
very puzzling. I completely agree with you.
Yeah.
But I have no idea why. You know,
Yeah.
maybe there are like big investment firms that has been involved in the crypto, and then they maybe just running the same algorithmic trading for the cryptos they have, and also for the S&P. I don't know. But it's a very interesting pattern. Yes.
Right. Yeah. Okay. Thank you.
Thank you too.
Miss.
My question is about mining and renewables. You started with hydropower. Why? Is it your favorite, or is there other? I mean, I've seen like wind and solar. What's the optimal energy source?
I think it's for the same as a lot of different solutions. So you want a mix of this grid, and I think this is important. If you are in the north of Sweden, for example, there is like lakes everywhere. You have like very good access to hydropower. Then this really makes sense. If you're closer to like wind turbines, and this really makes sense, and that's clearly something that should be part of the solution. For us, it was really more like philosophy. You know, we could have gone with like nuclear. We could have gone to Iran, to like a lot of places where, you know, they're just like burning fuel to inject electricity in this mining. That was just not something we really wanted to do.
It depends like on where you are, mostly.
Yeah, I think so. But you know, again, it's
what you have available, what's
exactly,
cheaper,
exactly.
etc.
And there is a very interesting aspect with renewable energies because, for example, solar. Of course, you produce electricity when the sun is here, and when during the night, then it's not the case. And that means mining at this moment can really be a very interesting buffer for these companies, because there is always like peak of production, where at this moment you can sell at a
You can sell it back to the grid.
exactly. So and that's where you can negotiate with like the utilities and say, okay, at this moment I know that you can find anyone that will purchase. So I'm willing to buy your electricity for like a very cheap price, and then I will make my facilities run. But of course, as miners, you want to work 24/7 as much as you can, of course.
Okay, thank you.
Pleasure.
Anything else? All right. Well, I guess we're gonna close it here if there is no more questions. Thank you so much. Yes, please, Dr. Hamid.
So I believe in 2016, a couple in Maryland stole, some bitcoins perhaps, and which are now worth $7 billion. I mean, it was recovered. And if
What do you mean stole?
Pardon?
What do you mean stole?
Well, that's what I'm not clear about.
Okay.
So, you know, in 2000, obviously the security must be much better now. But if a couple sitting in a bedroom can steal that much, what is the status of security? I mean, you have to have trust in the system. Has there been an improvement? Just general take on how secure the system is.
I mean, maybe Berat has another opinion, but I think the Bitcoin algorithm hasn't really changed in the past since its developments. What I think what is the risk with Bitcoin, and again this goes back to the quantum computing thing, is if you can gather more than 50% of the miners, then you basically have the potential to trick the blockchain and to like maybe go back and like change some blocks and just like transfer a lot of Bitcoins on your personal wallet. No, otherwise I don't. I mean, of course there is like, maybe when you say stall, you may have some hackers that have targeted some crypto exchanges, and there has been some problems in like with the initial project like DAO, where the software team did like, they just forgot something in the algorithm, and some very smart people, they tried to find a way with some kind of backdoor and like a loop where they could like take like most of this crypto. Then when you do these kind of things, then the market is going like totally crazy. Will you be able to, if you sell something and then the value is like going down, then does it make sense? So you need to be like a smart a thief and like just steal the right amount, but not like have too much impact on the market and on the community. But yeah.
But not only for Bitcoin, but also for the smart contracts, the Ethereum and etc. Like a lot of smart contracts, what you see for this NFT project is actually the copy of another smart contract. So the one of them, if there is a leak in the smart contract, actually you are replicating in all existing projects. And it's like a very open door to steal the value from people's wallets. So it's like at the very early stage of the security in the field. So like you gotta be, I don't know, like there is a lot of room to improve. That's what I believe.
All right. Any follow-up? If not, I wanted to thank you guys so much for your presentation, for coming here, for being available for questions. Can we give them a round of applause?